Good morning. This is Dylan Jovine from Behind the Markets. Happy Monday. We start another week together, the first Monday in November. I've begun to think lately that this might be the craziest year in the recent history of financial markets. Really, it's just been kind of buck wild. And I wrote some notes down here. The S&P is up 30% year to date. Gold and silver and Bitcoin have been rocketing. S&P 500 hit its 47th all-time high this year, which has been unbelievable. Gold is up 34%. It's beating the S&P, and we've talked ad infinitum about the warning signs that means. But gold's up 34%. It has hit 41 all-time highs and is on track for its best performance in 45 years. It's unbelievable. Utilities are trading at all-time high. The S&P 500 has hit 47 all-time highs. It's unbelievable. Silver skyrocketed 43% and is not trading at levels seen in 12 years. Oil prices are crashing like a recession is coming. 71% of global central banks have cut rates this year, the highest share since the COVID crisis. Interesting side note. Major central banks are cutting rates like there's a recession coming. Oil prices are falling like there's a recession is coming. The U.S. posted the third largest budget deficit in its entire history, the largest in peacetime or without COVID. There's no doubt about it. U.S. federal debt hit a record of $35.8 trillion. We talk about that a lot here. And again, it's interesting when we look under the hood of the U.S. job market, we see that most of the jobs that are being created are government jobs. So the U.S. government just gets bigger and bigger. And the U.S. job numbers have been revised very much downwards, 818,000 for 12 months through March. It's the most since the great financial crisis. And side note, unemployment, firings, actually, layoffs have jumped this month to the highest level since the COVID crisis. So it's like we have a bipolar market. And what's unique about this market, in my own experience, remember, I was a young buck in the 90s when the dot-com thing took off. And the internet obviously was a super big deal, changed the world. AI is obviously a super big deal, equal to that, will change the world. There's no doubt about it. But I've been asking myself, is this 1997 or is this 2008? And I'm starting to think that it's neither. It's a combination of both. Because in 97, you had a bubble that ended up going on for a couple more years till the Fed just said, enough, irrational exuberance, and popped the dang thing, which of course caused such a disaster for so many people. But once the Fed started raising rates in 2000, I just started selling out. I sold stocks, I sold my brokerage firm, I just got out of the game at the end of 99, beginning of 2000. But so in the 90s, you had this crazy internet bull market. Right now, you have this crazy AI bull market, and it is real. There's no doubt about it. When you look at the numbers, Microsoft, Meta, NVIDIA, all these companies are spending on AI build out. It's real. They're buying data centers. They're buying electricity. That is creating jobs. There is no doubt that is real, just like the internet build out was real in the 90s. But what's interesting about this is in 97, you didn't have a housing bubble. Makes this absolutely unique. You have a housing bubble in 2024, bigger than the one you had in 2007, 2006, 2007, leading up to the Great Recession in 2009. And that makes this, we have a debt bubble, we have an asset price bubble. And again, I'm not saying AI is not legitimate, but I am saying that the market is overvalued by any objective measure you want to use. The stock market's overvalued. The housing prices are overvalued by any objective, by every standard evaluation tool you would use, any reasonable investor would use. So we have these massive bubbles in the stock market. We have the massive bubble in the housing market. We have this massive, frankly, it's become a bubble in long-term bond prices. Bond prices are trading way higher than they should be. They should be trading a lot lower, 30-year bonds, and yields should be much higher. And this is just a crazy, interesting market with gold rocketing, silver market rocketing. You know us, when the risk got above level 5, we started to become more defensive, and that happened in July. And look, we're very lucky here. We get to have our cake and eat it too. We sold off a lot of things, we brought in our sales, and we've been killing it since then. We've had so many triple-digit winners, it's laughable, really. It makes me look like I'm a better hitter than I am. It's like playing baseball in a really small ballpark. You know what I mean? Like all of a sudden they bring the fences in from 400 feet to 200 feet, and everything I did, all of a sudden I go from hitting 60 home runs to hitting 80 home runs, or going from 30 to 60. All of a sudden I'm the best home run hitter ever. That's the kind of market that we are in. They brought the outfield fence in, and that's great. But look, this is a bit of a crazy market. It's the craziest market that I've seen in many years, at least since 2007. But then again, COVID was crazy too. There's a lot of crazy happening. I think when you start to, which really ties into what we talked about with the financialization of America. Wall Street basically took over Washington and turned everything into a casino. It's really quite unfortunate, but that's a conversation for another day. Anyway, have a great Monday. I'll see you tomorrow.